Hey everyone, FinanceFeeds is at iFX Expo International here in sunny Limassol, Cyprus. I'm joined now by Richard Elston, who is Group Head of Institutional at CMC Connect. Richard, welcome. Thanks for taking the time.
Thank you very much for having me.
So Richard, CMC Connect recently integrated the CRM and FX broker client portal from Scale.
Correct.
Was this the missing piece from CMC's white label
I don't know about missing in that. That's not to say anything diminishing about Scale at all, because I actually think it's more complementary.
Okay.
So we have a robust white label platform and ability to use it for other clients as well. But it was more about providing a service that perhaps our clients, especially in the white label vein, would be interested in utilizing their services. So coupling the two things together seemed to make sense perfectly. It's a solid platform. We have it operational now, and we're very happy, and I believe that the clients are happy with it as well.
And why did you particularly choose Scale over, let's say, other providers?
We reviewed a bunch of other providers, and it just really fit the bill. It was in agreement with a particular launch customer as well, and it just simply worked for the entire family in that way.
So new customers that are onboarded can look forward to this integration and essentially use these services?
Ultimately, as I say, it is there, it's available, it's pre-integrated. It is utterly down to them if they want to use that service, and we'll present it to them as an option for them to be able to utilize.
Great, awesome. So CMC Connect also has plans to roll out cash equities product suite to institutional clients.
Yeah.
This is going to be covering a wide range of global stocks, with new regional and international markets set to be added, I think, in the coming months, right?
Absolutely.
What led you to introduce this product offering? I'm curious because there's so many things going on.
I guess there's two things.
Between sanctions, global trade, de-dollarization, all of these things that are...
I think there's two things. I mean, we've been speaking about derivative asset classes. This industry has thrived on it for years. It has been challenged. At the same time, I think there are a number of rationales and strategies to be able to want to be in the real money world with proper securitized assets. But beyond that, we see our customers demanding this. We've seen even in this traditional brokerage world that there has been a leap, maybe first to single stock CFDs, and then that subsequent demand for actual cash equities as well. But I don't think it stops at cash equities. Our plans are, yes, we've just launched this. It's available within the platform environment, and also, a significant majority of what we do, we deliver as a liquidity provider via API.
Of course.
Consequently, these assets, these instruments need to be delivered by that same unified vehicle as well. So we're getting that call from our customers, and I think it also takes us into a realm whereby we have an alternative group of customers that we can face. And if you're interested in being in the asset management, facing private banks, operating with family offices, you need to have these kind of asset classes beyond the mere CFD. But like I say, I don't think it stops there. We have a launch of F&O, of futures and options, coming up around November time this year. We have a synthetic options offering that's going to launch simultaneously. We've just brought on DMA execution within the CFD world.
I see.
I hope that we get into fixed income in the latter part of the year. The list goes. Again, I think if you're looking at hedge funds, it's very difficult to be in that world or aspire to that kind of world if you don't have the tools in order to be able to do it. So that's pretty much our rationale.
And in terms of the regional markets, right, that are part of this cash equities offering, can we kind of talk a little bit about that? Is it really demand in terms of the similar type of demand that we see at certain times for emerging markets currencies we're seeing now for cash equities in certain regions, or is it very specific demand from your customer base?
As I say, I think it's our customer base, but I think there is an aspiration for that wider customer base. Don't forget, we also come from a strong stockbroking background in Australia. We have a relationship with circa 1.2 million clients out of our Australia. So cash equities is nothing new to us in that we've been involved for the last probably, I think it's about 17 years down in the APAC region, and all we're really doing is making sure that we've bolstered it and brought it into the European frame as well. But yeah, there are some regional dependencies. I think we're seeing that real money, especially where I'm based now in Dubai, there is a call for that kind of for that particular style of instrument.
Yep.
You've got a lot of wealth in the region. Hedge funds are moving down there. They're moving there for simple reasons, such as they want to. They know they can asset gather very well by nature of the wealth in that region. And if we're gonna be able to facilitate our flow into our technology and liquidity into those clients, we need to have cash equities and the other stuff too.
Of course, you have to have everything, right?
Absolutely.
It's like
one delivery vehicle, one platform, one API. Try and be as many things as you can to as many people.
It's the way I say it is, it's not a multi-asset offering; it's an all-asset offering. Now, right?
I don't know. We're not trading quite everything yet, and that's going to be a topic. But we're doing the good stuff.
Also in April of this year, CMC Connect tapped Lucera's, I think, Loom FX to bolster your existing in-house fixed connectivity offering for FX and rapidly scale a wholesale non-bank FX market making.
Yeah, I mean, we've been involved with Spot FX for a while.
Is there any place where your liquidity offering is still not available?
I'm pretty sure there is, but what Loom does give us, I mean, Loom is a de facto, what Lucera have done, they created a de facto standard to get your liquidity from A to B across a giant spectrum of makers and takers. If you're not involved with it, you're probably missing out. So it is an incredible transport mechanism that allows us to get to multiple client types within the FX world. And given the fact that we do provide FX as a CFD, of course, many of the customers here demand that.
Sure.
Again, it takes us into a universe whereby if we're providing spot, takes us again to a different client set, whether that's banks, whether that is the standard ECN venues where people can, where you can participate in liquidity provision there.
Mm-hmm. Of course. Yep. The regulatory environment obviously has changed in the last few years. It's motivated many players in the FX brokerage space to launch an institutional FX door. I'm sure you've seen a lot of this, and it still continues. I saw, I think, one formerly just retail brokerage now sort of launching an institutional offering. Do you feel like the competition in this space is like really hardening?
I think a lot of people have attempted it over the years. There's provision and there's provision, and there's styles of provision that you can take. If you want to participate in the institutional FX space, yes, there is competition out there, and there are some incredible players, as well as, of course, the tier one banks have been involved for many years. Yes, we've seen some of those newer players eat into the lunch of the tier one banks, but I think the way we provide it, we are not simply taking feeds from multiple sources and aggregating them, mashing it up and throwing it out the other side. We've got a situation whereby we create our own mid, it is our own price, it is so anything that we apply to that is by our own design. We're simply not how shall I say, a prime provider. And I'm not saying at all that there isn't a place and an opportunity for those kind of providers, but this is the route. It's a very expensive business being involved in the FX market. It takes up a lot of capitalization for a very small dollar return on a per million basis. We felt strongly that if we were going to do this, this was going to be we were going to take the best of what we've done, and that's being a market maker, and apply that to the institutional frame. So I think we distinguish ourselves between us, and people draw comparisons between us and similar companies with similar pedigrees, most of whom are prime providers. We are what we call a non-bank liquidity provider, and that, I think, creates a differentiation and the want for us to be able to pursue this more. And with stuff like Loom FX, it has, our volumes have increased significantly. Sure. Of course, there'll be competition, but bring it on in many ways.
Right. Yeah. Last question. Many people are talking about de-dollarization, at least in the media, right? I would say really more so in terms of the shifting landscape and global economic trade, right? What I see is on the institutional side, in some ways, this is creating demand for emerging markets, currencies and things like that. Since you have such a broad sort of experience in the FX space, do you think that this idea of de-dollarization can bring some opportunities to the FX industry, or maybe challenges? Both. Specifically, maybe even liquidity-wise, if we talk about emerging market FX.
At the moment, being quite frank, I don't think we're heavily enough involved in emerging markets. There's an absolute demand. We're seeing it, whereby we have on the roadmap a strategy whereby we do want to be more involved in, for example, non-deliverable forwards. It's not here right now. It's something that we're looking at for the future. I do think that we have other macro shifts in the world. We've seen production issues in China that are actually lifting cash out of that region and maybe moving them into other parts, which is another reason for us to be in Dubai, because we are seeing an inflow of monies from globally. But I do have a little special interest as to what's going on in Asia and see how much of that transports itself over to that part of the world. But no, we don't have an NDF strategy at the moment. It's something that we're looking at, and we'll see where it takes it maybe next year.
Perfect. You did mention Dubai, but you were a resident of London for many years.
Absolutely, yeah. I shifted out.
How is that shift? How is that transition? I'm just curious.
On a personal level, fantastic, and it's a great environment to be in. In terms of the business level, I think there's a tremendous can-do business attitude there. We are seeing a gravitational pull into Dubai. It's amazing the amount of people you just bump into in the street when you're not avoiding the sun, that is, of course. But at the same time, I think the regulatory environment has been very very open. It's I mean, we've got 40 hedge funds, I believe, in the DIFC at the moment. So there is an attraction for both staff in terms of how the regulator down there is prepared to receive people, the inflows of money that are coming in, the ability for hedge funds to go into that environment and say, do you know, yeah, sure, I'm in a place that's wealthy. If I'm going to raise capital, it's a pretty simplistic and good idea to do it in this place. We've always had a mature business in Dubai. In fact, I believe that we did our first institutional trade back in 1996 out of the UAE. And even on a current business level, it's always been, if you were to dice it up into geographies, the whole of the GCC region is always a very fruitful geography for us. So to not be there and not protect that and enhance it would be kind of silly. So we're there.
Of course, yeah.
You know.
But how do you manage the heat?
You don't. I picked up a tiny bit of colour from being here for a couple of days. For the last 2 months, I've been running away from it. So July, August, and even September, it's aircon to aircon, and that's the way it works. I'm afraid. But the rest of the year will be beautiful. I have no doubt.
Awesome. Well, Richard, thanks for taking the time to join us.
My pleasure.
It's a
Absolutely.
pleasure to speak with you, and good luck the rest of the way at the
Thank you
conference.
very much, and enjoy the show, everybody. Okay, thanks.
Thank you.